G'day everyone, this is Rangadad, not financial advice, just the way I'm looking at the market. This is the monthly update, a little bit late, but been a bit busy. I guess let's start with Bitcoin. It's probably what most of you guys are interested in. We retested and rejected that value area low, that 40%. I used 40% from the value area. I know the 70% is based on one standard deviation, but I just don't think that really is that valuable. At the moment, it looks like we do want to sweep these lows here. I don't think there's a world in which we go up from here, but we have been holding this level pretty well so far. The thing that concerns me about that is if we do drop that level, say the 100k level again, you're probably going to move pretty quickly down into probably into this volume node here at about 94. Sailor shift ratio is still in a sell bias. That's because gold has started going back up again with silver. So obviously Bitcoin's not performing against gold, and that's basically what the Sailor shift ratio is. It's just a measure of the ratio between the two. The other thing here that is still concerning is global liquidity. That read, obviously we rejected this level here, which was a previous sort of trend line. We're still finding support at a level that's kind of a trend line as well. This doesn't show all the way back just because Bitcoin doesn't go back that far, but it does link up with another low, another previous low. So we're kind of in this little triangle here that I think if we break to the downside of this, it's going to basically be the start of the bear market. But at this stage, I have a funny feeling we could maybe do another little bounce up into there and then drop away. But I think the main reason I'm thinking that is everyone's expecting this market to tank. Everyone's now talking about all the reasons why the economy's fucked and the market should go down. And it's not necessarily the time that you will see the market bottoming by any means or even dropping off. I do think we'll get a relief rally soon on Bitcoin. I think the whale that dumped their entire position, like Satoshi era whale that dumped their entire position, that's spooked the market a little bit. So, yeah, I think for the time being, I think there's a little bit further to go here, but we should get a decent relief rally. The thing that I guess concerns me about that as well is we're already seeing kind of the relief rally come through on Nasdaq and S&P 500. If Bitcoin doesn't go with it at this point and they drop off further, then Bitcoin could potentially get into the 80s pretty quick. Looks like this purple one's probably the closest one out of all of them. Bit of a mix of the green and purple going on here. We didn't quite hit this trend line, so I think that is going to be a pretty key level. Like if we went down there in the next day or two, you're talking 95, 96, and then that is a level that has a fair bit of confluence in it. At it. So fairly basic overall look is probably still got a little bit to go down. Quick look at Ethereum. It's sort of heading in the same direction. No real read there. That was previous resistance that I had on there from back in this area. Had a good bounce off it, but not looking super strong. The other thing we've got obviously CPI coming out. tonight, Australia time, and PPI as well. Retail sales, there's a bit of economic data that should start flowing now that the US government supposedly is back in action, I think. Someone's bought a fair bit of ETH. Yeah. So yeah, just global liquidity wise, it's not looking super healthy, but we have found a bit of support there. So I think just need to sweep this low. I think that's the main thing that's stopping us from going up further. Quick look at stablecoins versus total crypto market cap. We are obviously well below this bull market support, and it looks a lot more convincing than previous times we've done this. The fact that we've even broken back below this trend line here, retested, kind of, it's not really a channel anymore, but the trend line for the top is still in play. And we have swept the low on that total versus stablecoins from that big flush liquidation event. So I get not really give me a clear read there. It does look more bearish still, potentially back into these sort of levels. And there is a reasonably key level in here as well. I can get rid of all these little bits and pieces. Tidy up the chart a little bit. Basically, there's a level through here that's a reasonable level. And then obviously you go down to this level here, and it's got 1-2 wicks there. So let's put that one in as well. There's sort of stages. I don't, at this stage, I don't really expect it to go much past this, but this lower level is certainly a possibility. If we do hit that, I would expect a reasonable bounce, at which point we're probably bouncing up somewhere into this region again, which on Bitcoin, the key region for me for that is just going to be probably up around this level, the 118 level. I think that's going to be a fair bit of resistance for Bitcoin. Okay. So that'll be a bull trap, I think. I don't see us really continuing much past that. Could be wrong. I'll have to see what the charts say. At this stage, I'm expecting sort of end of November, start of December to be fairly bullish on markets. And then just around Christmas, New Year's time, I think that's when you'll first start to see the next top coming in. And then 2026 is going to be pretty wild. Quick look at NASDAQ on the daily. Yeah, it's kind of a coin flip at the moment. Could be climbing the wall of worry, could just be putting in a lower high. Not really leaving many gaps at the moment. There is a decent one up here, so it's been pretty wild. Like that's a massive gap up, but off a fairly good level there too. So turn this on, but it's not. Yeah. Don't worry about the dots. It's something I'm working on the indicator, but we go down to say the 6 hour. So the blue Bollingers there are basically the daily Bollingers. Don't worry about those trades either. That's not doing anything in particular. I guess the key point here is we are within these Bollingers now on the daily. Higher time frame, it looks like we've potentially got a little bit more to come as well. these ones are basically a 4-day Bollinger at the moment. So 4 or 5 day, it's going to be pretty similar. Interestingly, closed above the one standard deviation and then bounced. But yeah, that's also it's bounced from the lower one standard deviation Bollinger. But at the moment, the Bollinger Bands are contracting, and it's looking more bearish than not. I need to get rid of that dot, don't I? Annoying. Yeah. I didn't get rid of it. There we go. All right. So yeah, we've got a gap above, gap below. Um, the way it's looking at the moment, I would actually expect it to close this gap below first. At which point I would kind of expect it to come down a little bit further, to be honest, back down into 24K. If we did, that would be a decent sweep of this previous low. I would then actually expect a bounce. At the moment, though, we are back above the 13 EMA on the 6 hour here. The 50 there is basically the 13 EMA on the daily. The closures below this, basically where we're at now, and the blue dots are the monthly VWAP, and the yellow dots are the weekly VWAP. So we're sort of in a very congested region here. This is a VWAP based on the high of day. The low of day VWAP, I think, is up around the regular VWAP, which won't be showing on this. But so basically going through a bit of a squeeze at the moment in this level. On the shorter time frames, we can have a look at the drops that we've been seeing. Been pretty nasty. That was on the 1 minute and the 15 minute. That was actually telegraphed, but a good level as well. So that was a good trade for me last night. I actually traded this little pump as well. That was good, but for the time being, we're sort of in a range here. There's no real decent read on direction. The mid band of the 4 hour Bollingers is becoming resistance at the moment to the top, and then the mid band of the 1 hour Bollingers. Sorry, 4 out of the bottom. It would be 16 out of the top. You'll find there's all sorts of levels, all sorts of time frames that come up with a resistance level there, but closure above the 200 EMA and the 50 EMA and things like that on the 1 hour here is a good thing. We're above the daily VWAP. We're above the monthly and the weekly VWAPs. It's starting to look more bullish. Obviously, there were some pretty good V-shaped recoveries off the lows here. It's kind of, we really need to be breaking above that 25,800 and change on NASDAQ to really sort of confirm bullishness. But realistically, not a lot of vector candles to go into up there. So the reason I say that is I'm looking for where previous inefficiencies were in the market, and maybe we get up to 26,200. But at the moment, just looking at the hourly vectors, there isn't a lot above. Like, if we come back into 25,800, recover the rest of this vector candle, and then reject, then it's probably downside's more likely, and you're going to be coming back into this range here as a minimum, I would think. If we come back over to here as well, it's actually not a vector candle in this group on the 1 hour, but you could sweep that low pretty easy as well. I think there are vector candles in this one on the lower time frames. So 24th, 390. Yeah, we did close that gap. Well, it's done what it needed to do on the downside to close some gaps. If we do break below, we make a move down and attack this, I actually expect it to follow through. And then from there, you're actually talking about a decent pullback, I would think. Yeah, I'd be looking more down around here, down around the 24K level on NASDAQ as a minimum. I was looking at something the other day. I can't remember the exact scenario, but I sort of looked back through history with the Bollingers, and basically every time we've come from a new all-time high and we've crossed what was it? Sorry, I don't remember. There was a scenario that basically said we would come back down into this level here. And look, there is vectors and gaps down to that level. There's vectors and gaps all the way through this. So we could very easily come back down into these areas. Don't think it does it straight away, though. I think there's too many people that are bearish. And that's not really a tradable thing. It's just be careful being bearish, because there is still a lot here to get through to be confirmed properly bearish. Yes, this could potentially be a lower high if we roll over and close this gap, but it could also be just a pause on the way up. We could be bull flagging at the moment. So we need to kind of have a clear break either way. The fact that gold is running again, I think could actually bolster the market a little bit. At this point in time, gold will really only run when the market is looking okay. Once the market completely shits itself, then gold will come back down as well. Okay. Gold, the target on gold is pretty much, it's up around that 42, 4300. Maybe a stretch into 4330. If we break through those sort of levels, then I would expect it to go on another run, and that's going to probably look pretty mental. You're potentially going to be, yeah, tapping on 5,000. So, and it'll be more vertical than that. I'd be expecting, well, that's interesting that that's Christmas, basically. I'd actually be expecting it to hit those levels before Christmas. That's a very interesting time frame for me. I think the start of 2026 is going to see the top on a lot of markets. Just starting to get that read. Much on the Qs. Equal weight. Equal weight isn't as gappy as the main one. Sorry, let's just turn this off. Go back to daily. But yeah, obviously we've hit these trend lines through all the tops, and we've rejected them. I don't know where that trend line is supposed to be going, but yeah, there is a tightening wedge from historical bottoms. Next stop down from that, you would actually probably be drawing it through there. So somewhere into here, 95, 96, around 96 actually, is the next target to the downside. Now, we are shaping up for a head and shoulders on this if we roll over, and we could get all the way back up into this trend line here and then reject. It doesn't really matter. The point is, it's hard to be bullish, it's hard to be bearish at the moment. When you see people buying so hard off key levels, it takes a fair chunk of money to actually do that. That's not just retail being involved. S&P 500, similar story. Obviously, I got a longer term trend line on this one. The previous breakdown of the previous run up is what we've hit, and we finally hit it. We were talking about it in here being so close to it, and obviously it decided it wanted to hit that. Technically, there's still a gap just above as well. So don't be surprised if we get a little bit more of a pump, particularly if there's good CPI numbers, and they're going to use it either way. Like it could be good numbers and they'll tank the market. It could be bad numbers and they'll pop the market. It's just a catalyst. It's not really the read itself that matters. SPY, interesting. Don't think it's going to do much until we get those numbers tonight. Equal weight. S&P 500 is looking like we're either in a big bull flag or we're in a distribution. For the time being, that actually looks fairly bullish. On decent volume too. Decent volume all through the bottom here, and we have moved up, which typically means there is commitment there from the bigger guys. So this stage, and the thing that would probably cause most pain at the moment to a lot of retail, because everyone's turned bearish, would actually be that we pump up and hit that longer time frame trend line. That'd see us do new all-time highs, and you want people to be forgetting, saying, "Oh, there is no bubble. That was just all FUD." That's when the market will probably drop. At the moment, I just don't see us having a massive crash from here. Could be wrong. There's just so much wrong with the financial system at the moment. So we are seeing a few businesses fail too, which could have some flow-on effects. So earnings has been interesting this season. Generally, most of them are beating, but there are a few warning signs from the likes of McDonald's and a few retailers that are saying basically the poorer part of the economy aren't spending at all, and Maccas are seeing more of the more affluent people coming into Maccas. And so that means even the middle class and stuff are starting to feel the pain. So we're seeing the signs that things are on the starting to slide, but the market doesn't necessarily realize that straight away. If we get back above that level there, so 2468, let's say 2470 on the Russell, then that would actually be quite bullish. Let's say 2475. I think it could go on a bit of a run. And when Russell starts running and S&P 500 isn't, that's typically when we get a end of market, end of bull run kind of scenario. Quick one on gold. Yeah, I've already done that. Sorry. Where are we? Okay, industrials. Again, could be distribution, could be a bull flag. XLV, so healthcare is an interesting one. We flagged this a while ago on the breakout. It's a defensive sector, and it has struggled. Like S&P 500's been going up the whole time this thing's been coming down over the last couple of years. So it's playing catch up. I suspect when we start to see this roll over a little bit, that'll be another sign that we've reached a peak in markets. XLY, XLP, so consumer discretionary versus consumer staples, is pulling back a little bit. That's actually diverging a little bit from the S&P 500, so that is a bit of a signal that that divergence is generally a bearish signal. Same with the equal weight. So the equal weight didn't even make it a higher high, whereas the standard one did. That is a bit of a red flag that we could be going a bit further down. At the moment, a break below this level and pull back even harder, then yeah, we're coming back. But at the moment, it's a hard read. XLY versus SPY, so this is consumer discretionary versus SPY. Confirmed break below this, which it looks like it's trying to do at the moment, would be pretty bearish. We could still find support there, but at the moment that's a bearish signal, I would say. Consumer discretionary versus SPY on the equal weights. Obviously that's been down for a while now, and that's a bit of divergence against the SPY itself, so against the market itself. Still moving down on XLP versus SPY. I think now we can sort of start looking at this here as a bit of a downtrend, that if we can break that and confirm above, then that's probably more of a sign that we've got something big to come. We did the same thing over here and the market dropped. So I'm going to be looking at this one reasonably closely. I think that's a pretty good read, reasonable early indication. Same with the equal weight version of that, consumer staples versus S&P 500. It looks like a bottoming structure here, no doubt about that. I think, again, break above this level here, particularly that level there. It's just above the previous high here. If we break back up and confirm above that, then you're probably going to be looking at this sort of head and shoulders kind of scenario, which would mean further down on the market in general, and then a rebound, bull trap, then we sell off. I still think this will play out in some sort of form over the next few months. It's this one, equal weight. So it's consumer staples. Consumer staples does look like it's forming a bit of a base here, but I'd kind of expect this to still drop off. If the market drops off in general, it's going to be one where everything will drop. It's just this relative to the SPY gives you an idea of when that drop might actually start to happen in earnest. Regional banking, still not looking great. Bit of a rejection there. Probably, again, that's not a great trend line, I don't think, but yeah, it's closed the gap. Don't think there's much to love about that. XLF. Financial sector in general is actually looking okay, but again, this is a range in here. If we break out above that, then happy days. You're potentially looking at further into 2026 before we get issues. But at the moment, still range bound. Still could be a distribution. Home construction. The construction data in the US is actually pretty weak at the moment. So it doesn't surprise me that this ETF this index is selling off. This is the ETF version of the index. So there is a big gap below here as well. Kind of, yeah, this is looking like potentially a pretty big head and shoulders. Obviously, we broke fairly well below there previously, but I expect us to come back into this level here, 71, which is not going to be great for the markets in general. Similar to this one, again, good bounce off this trend line. If we break back into this channel, then markets could be okay. But at this stage, no sign that that's really going to happen. Semis, same sort of thing. It's a bit of a pillow fight at the top here. Lots of volume off that bottom there. I think it's giving us a pretty key level. Let's just put a trend line from here through that low there. Didn't really hit that, but yeah. We'll see if it can get a little bit further up, close the gap, and then meander its way down. DJT Gold, basically, it did look promising. It actually broke back above this level. At the moment, we're still fighting with that level though. So realistically, this is your new level. Breaks below that, confirmed breaks below that, and that's not going to be great for the markets. But at this stage, it does look like it's trying to maintain above that. So bit of a coin flip at the moment. What's this? Oh, everyone was talking about this little spike here in the reverse repo facility the other day. Just zoom out. Like, yeah, it's a bearish sign when banks are having to use this facility to get liquidity. But you just look at it compared to what it was through COVID and even in the lead up to COVID and stuff like that. We're at nothing levels still. So just don't pay too much attention. Probably the biggest concern really is the secured overnight funding rate. That is dropping off quite hard, and typically that's been aligned with issues in the market. What's that? September. Let's just have a look at. Am I looking at the right thing? Hang on. Just make sure I'm actually looking at the right thing there. September 24. Okay. That makes more sense. So September 24 was around this area here. So it actually went up. The market went up after that drop, right? So even when people start talking about that sort of stuff, they are overall economic indicators suggesting that there's potential issues in the banking sector and stuff in the back end, but the markets won't necessarily react to that. I guess that's what I was kind of trying to get at. The VIX was weird the other day. It was coming down while price was going down, which was bizarre. But again, we are sort of at elevated levels, a general uptrend there. So it's something to be careful of. The skew got hammered again. So bit of skew crush going on. Didn't make new highs on skew. Skew is suggesting that we've basically topped on markets, really, looking at this divergence between the highs that we got to versus the highs back here. And we're actually making new all-time highs on the market here. the skew's pointing to downside. 1-day VIX is generally trending up as well. So that is suggesting that we might have some issues on the near horizon. So that's one to watch out for as well. Let's have a quick look at the advanced decline line. So advanced decline line is nearly up around the all-time high. Basically, with this one, what we're looking for is essentially a retest of that previous level and a failure away from it. But breaking down below this level here would suggest there's potential pain on the horizon, right? But I'm not finding the advanced decline line super helpful at the moment. I think that one might be broken as an indicator for the time being. DAX in this big range. Yeah, Chinese stocks are going okay, but still haven't really broken back above previous highs. UK market's been going nuts. That's been a really interesting one to watch. Don't really know what the driver for that is. Japanese market as well, yeah. What about that? Sorry. Yeah, it's looking pretty good, but again, that's getting pretty blow off toppy as well. So a lot of the markets around the world apparently are doing that. I don't watch all of them, but I have heard that a lot of different markets are going crazy at the moment, which looks pretty blow off toppy. So you're not getting necessarily a concentration of peak on one particular market, like the US. It's potentially had its peak, and all the money's flowing into the rest of the world. At the moment, at this day and age, it is easier to do that than what it has been in previous cycles. The big firms generally play the global market. So the blow off tops might get a little hidden this time around, if that's what you're waiting for. In general, again, we're in a decent range here for high yield junk. Break below 80, it's going to look pretty nasty. Breaking below that and won't look great. But clear that and we'll go on a bit of a run. TLT kind of looks like it has bottomed here. TLT's had a lot of action down in this area. Yeah, you'd be expecting rates to keep coming down, so TLT should keep going up. Bonds, yeah, not great. LQDIF, so they got smacked the other day. And they were holding up more than I thought they should have been recently. So that's an interesting read now. It's actually looking a little bit bearish, but we are in this range here, which has been a massive volume range previously. So kind of want to break below that. A break below that, and the market's coming down pretty hard, I would think. To your 10-year. Not much. Let's go to copper. Let's see what Dr. Copper's doing. Dr. Copper's had a bit of a pause here. Obviously, previous high in there as well. We're basically just under this previous high. Generally, like that's still pretty bullish, but a lot of volume through this level. So be a little bit careful because with this much volume in copper, it tends to be at areas where you're going to get a reversal. Same here, volume through that base and we took off. Volume through this base, we took off. Lots of volume around the top, we drop back. Okay. So it could be more like this where it could just push through, but not really seeing that in this distribution at the moment. Iron ore, kind of middling. That doesn't look that great. That Could be a triple top there, and we're just retesting the breakdown of that. Key level here for iron ore, actually. And I would think if iron ore comes down, then again, the market's going to come down a bit more. Yeah. Same on TSI. So lots of key levels getting hit. What we don't really want to see, if you want the market to keep going for a little bit, is gold to actually hit this level and pull back, or before it. If gold starts pulling back from here, and to be honest with you, I think it might do, gold runs the risk of doing another one of these for us, like it did before, and potentially break out again. But got to look at it from the perspective of a lot of guys got into gold down here. Like I first bought gold was in this area here when it looked like we were bull flagging. I sold somewhere, I think I sold around there and then got back in around here, and I've just held the whole way. Actually no, I've done a couple of buys and sells, but I think we could be doing something like this. So we could have a bit of a bull flag, wedge pattern form, pennant, whatever you want to call it. The problem is we're at least double what we were back here in these areas where there's a lot of volume got bought in here. We haven't necessarily seen that distributed yet. So maybe these people will hold on. Maybe all the governments will hold it and stuff like that. But generally, when you look back at the gold chart through history, gold will run up into major economic events, and even it can keep going as well. But you look at that, March 08, gold took 6 months and dropped somewhere in the order of 25% or thereabouts, 30%, maybe a little bit more from the highs before it actually started to recover after GFC. And by then, S&P 500 was recovering as well. 2011, that was a pretty tumultuous time as well. 2019 had the run up into COVID. It did drop when the COVID drop happened, but it recovered pretty quickly. So it's one of those metals that you don't really want to be buying at the highs, because if shit hits the fan, people are going to be selling it to cover other losses. But at the same time, it could still go to 5,000 pretty easily. Silver versus gold ratio, I think that's probably where the better play is still. Silver has more to go than gold. I'm not going to worry with that anymore. I think I'm done with silver and gold for the time being. Like silver could go to 100. I'm not going to worry about it. It's just not worth my time and energy at this point. Oil is an interesting one though. If oil starts dropping into these areas and we start to find it basing around the 40 or 45 or anything like that, even this level here is starting to look a bit attractive. If we get a move where this actually becomes, we actually get a higher low here, then oil's actually not a bad play. But at the moment, obviously, it's in a fairly big downtrend, so not really a buying point. But tell you what, the 40 area would be quite interesting. Dixie. So Dixie had the run up. It's hit the 200 EMA on the daily, I think it was. Turn this back on, sorry. Yeah, 200 daily. And it's had a pullback, which I'm surprised Bitcoin didn't run a little bit harder when it did that. Yeah, Dixie looks like it should actually go a little bit more, but it's really hard to tell. We've got to break back above this level here. And if we do, then you're talking 101. And potentially, I would expect it to go a little bit further than that. I'd be expecting at least up into this vector candle recovery, up around the 102 level, and potentially closing this unclosed gap and pick up this vector candle here at sort of 103.5. That's a fair way off, but it is possible if people start putting into safety, which means TLT will go up, and you know, general the Dixie should go up, and especially when everyone's so bearish on the US and the US dollar and stuff like that at the moment, this isn't a place where you would sell it. Where outside these Bollingers here, whenever you're outside a long-term Bollinger, and this is like a 4-day Bollinger Band here, whenever you're in that region and you've got expansion, then generally you're going to get continuation. Okay. But we just sort of need to get confirmation of that. Aussie US still holding up okay. So you expect this to be a distribution. I'll just turn that off again. Sorry. You'd expect this to be a distribution if the US dollar does keep pumping. I think there's a bit of inefficiency in here that may want to be recovered as well. So keep that in mind. It's not to the same level for the Japanese yen. What the hell's going on there? Yeah, better. Could be accumulation, could be distribution. It's really tricky to tell on that. Euro is probably a better read at the moment. And look, Euro's at a decent level here to the US dollar. It's just these inefficiencies here. If the narrative plays out that people start going to safety, then the US dollar is probably going to actually pump a little bit more. And just the fact that people are so bearish on the dollar makes it hard to short from the levels we're talking about at the moment anyway. M1 money supply is still going up. M2's made a new high. Not much to go off there. Auto loans did have a bit of a pullback and are sort of flattening off here a little bit. So that's starting to show a little bit of a pullback in people's ability or willingness to take on debt. Debt balance of credit cards is still pushing up. Schiller Home Price Index is rolling over a bit. Generally, that's not a good sign, but at the moment, you wouldn't say this is really breaking down or anything. House prices in Australia are still going up. That blows my mind, but it's happening. Mag 7, again, this looks like a Wyckoff distribution. That looks like sort of a Max Payne thing, but at the same time as leaving gaps. Realistically, we need to Mag 7 to sort of break below somewhere around that level there and actually confirm. Obviously, wicks below actually suggesting strength on this. Like we could actually keep going up. Just a bull flag. Tesla's in a range at the moment. This is getting dangerous. If Tesla does break below this, it'll bring the market in general down with it. Nvidia earnings next week is going to be key. It's a hard read at the moment, Nvidia. Big gap up, kind of nowhere. I think it's probably going to pull back a little bit into earnings. But at the same time, if it doesn't, if the market climbs a wall of worry and Nvidia's up at these highs again when earnings hits, that's one to watch because that'll potentially drive the market direction. Especially when Google have had their earnings and they're pulling back. Yeah, decent pump on earnings for Google, but realistically, to see strength in this market overall, you want to see closures above the highs there, and rather than just a vector candle recovery, essentially, what they've done. Microsoft, oh man, it's an ugly chart. Massive gap down here. You got to think Microsoft's coming back hard if / when this bubble pops. Yeah, expect Microsoft to come back well and truly into that gap. RK, let's have a look what it's doing. Again, it's not, when it's pulling back, it's having a rest, but it's not really breaking down from any key levels that you would say we're going bearish. If we close back within this band here, then I actually would expect it to continue. Sorry, just percentage of stocks above 50-day moving average. Again, it's kind of in the middle ground. It's not really giving us a great read. Could go either way from here. It's not going to pay too much attention to. Triple M, not bad. Had a big earnings. You would think that would continue from there, but a little bit like Google, it needs to do so to really suggest there's proper strength. Amazon, again, see, this could just be confirming the breakout, really. That's all-time high here. Gapped above it, came down, retested, moved away. We've closed that gap there now. If Amazon actually moves to the upside in the next couple of days, then I would expect it to keep going and the market to keep going. Meta has been the one that has been hammered this earnings. And that's an interesting one. That was massive volume. Huge volume. And it all seems to be around this, the actual earnings per share. Revenue was fine. They actually beat that to the upside. It's just they dropped their dividends. So it got smacked. Investors don't really like the direction, I think, that they're trying to take it in. So yeah, Meta's not really tradable here either. That's a decent level, but it still could come back down and fill these gaps down here. We've still got a big gap down here. Like, it wouldn't take much for Meta to drop from here another 30-something%. So be careful on Meta. It's not really a buy. Airbnb's kind of got smacked a little bit on earnings. Again, mainly the actual earnings figure. Revenue was okay, just margins aren't as good. I think a lot of these companies too, you got to be careful. Some of them are warning about hard times ahead and stuff, and that is actually causing a sell-off. AMD, wow. This thing's just been a machine. Again, it's a hard one to buy at these levels. I'm steering clear of anything that looks like this. I'm just, at the moment, just trading on the 1 minute, the 15-minute time frames, doing a bit of day trading, and with my long-term stuff, I'm just dollar cost averaging into the bear market indices or ETFs. Taking profits on the way up that I'm happy enough with. Might get back into Bitcoin if we see a decent bounce off sort of 95 area. Then I'll probably ride that up a little bit just because I'm closer to that one. But the other ones I couldn't be bothered trading short-term bounces. Interesting, looking a little bit double toppy on the long-term time frame here for ASML. A little bit of a warning sign. Again, it's not really confirmed. It's just could just be having a rest. Same with TSM. So TSM's holding okay after earnings, but it just the fact that it's not ripping to the upside as well. It's a little concerning. Stellantis still not really doing anything. Ford had a good run. Closed this gap. Not really doing a lot after that. So again, if the market says, nah, we're economy's fine, everyone's fine, let's go on another run, then Ford should actually come up into here and close this gap around $19. But I wouldn't trade that on that assumption. But it's not looking super weak here either. SX 200. This is probably looking more bearish than the US market actually. This could be a little canary in the coal mine, so to speak. Yeah, failure below there, particularly below this second support level, that's going to be pretty bearish for markets, I would think. Yeah, it's fintech, Aussie fintech, I think that is. Resources. Resources are looking okay, but again, I sort of not exactly convincing me that we're going to break out new big blow off top all-time highs there yet. Have a quick look at some of the other cryptos. So Solana's found some support on its point of control from this, basically this whole run up. Not a bad level there. I kind of expect it to sweep that. Potentially Solana into this value area low around 126. If we hit that at the same time Bitcoin hits 95, if we do go down that far, that would be a good buy point for Solana as well. But again, I'm not expecting these things to break to new all-time highs on the next run up. It's going to be a tough market to pick though. Like they could do that. There is no doubt that we could have a massive stupid blow off top. Generally markets don't end on a whimper, they end on a big amount of ridiculous FOMO. But it's a hard one to see that happening at this stage. The only thing is there are some whales accumulating at the moment, apart from old mate that was around with Satoshi and has sold all his. But yeah, it's I don't know whether the accumulation that's happening is enough to actually take us back up to new all-time highs. Don't think there's enough liquidity in the market to do that either. Retail's running out of money basically. Actually, this is one I forgot, but another reason why I think we haven't actually peaked yet. Well, or sorry, we may actually come back up into these levels, the 118 level, is we still haven't seen the people that are buying BTC USD long on Bitfinex. We still haven't seen them slowing down yet. Generally, you only start to see things topping out as the stochastic momentum on the BTC USD longs is actually coming down, breaking back into these levels here. There's no sign of that happening yet. These guys are still buying. This does look reasonably basey, but it's just whether we're going to sweep the low or not before we go up. I want to see these guys start to sell their positions to know that we're actually starting a decent run. Okay. So that's telling me that there's still some hope for the bulls yet, but it's timing wise, they're leaving it a bit late if you're a big bull in this market, because she ain't looking super healthy there. All right, I'll just bring this back up. Quick look at momentum. So longer term time frame momentum is starting to really bottom. What's that there? 1, 2, 3. So that's a 4. That's the 1-day momentum is actually posted to the upside at the moment, and the 4-day is bottoming. It's coming close to a low level. So one more rollover and sweep of the lows here is certainly on the cards. The cyclic RSI on the daily is turning down at the moment. But again, we're at pretty good historical sort of buying levels for a bit of a bounce to happen. Yeah, just having these levels below is kind of a little bit sketchy. Not seeing huge amounts of buying coming in on the dips either for IBIT. Probably more looking at it as distribution than anything. XLV, again, no big sells on XLV yet, so it's probably going to keep going for a little bit. Marathon Digital had some massive sells and has just been tanking since. Energy, decent sell up here. Yeah, it's not great for oil. We could have more downside on oil, but it's worth keeping an eye on. Ethereum, looks like we've had a couple of buys here on Ethereum actually on the ETF, so that's something to keep in mind. This could be a sign that we are basing on Ethereum. Coinbase, same sort of thing. It's had some interest down here at the lows. Typically, you don't get these at continuation levels. Can, but not often. Technology select sector. Oh, that's a few big sells through the top there, but it's definitely finding support here. So big buying level, big volume level. Doesn't look like it's over yet for the market. That's, I guess, kind of what picture I want to paint is it. There's no clear signal yet that everything's over, sell everything. We're done. Cumulative volume delta spot is still struggling, so it is suggesting that we will have another leg down, or at least probably go sideways here a little bit. You want to see this starting to actually make higher highs, higher lows. Yeah, at the moment it's not looking great. It looks like most of the futures trading is going bearish at the moment, which can be a contra indicator. Top traders are actually quite bullish at the moment. They haven't really dropped their positions since this point here. So they are expecting it to come back up. So from that perspective, like you don't actually often see it up that high for their accounts, or realistically for the positions. So sort of hitting levels or above levels that we were at when we found this low here. On that basis, again, it's hard to be bearish. Like it's hard to trade down to that or want to trade down to the 95 level. We don't really have a clear picture, but certain things are starting to suggest that it's not over yet. The big guys are still interested. From this perspective here, so CoinGlass Legend gives us a pretty good idea. The bubbles on this are starting to become really handy. They weren't great until we got that big flush, and now they are starting to come in at highs and lows more often. So the fact that people got a little bit excited up around the top here suggests there is still interest out there. You look at this and there is a lot of interest below compared to the interest above. It's still not huge. Like we're not talking the numbers we were before we had that liquidity flush. But certainly there, if you look at it from this perspective, the closest liquidity in terms of large orders is to the downside. Okay. And this 94, 95 level, you'd have to think that that'd be a pretty good level. I don't know that these guys are going to get filled if we do come down, but at this stage, that's what it looks like. It looks like we should come down a little bit more before we actually find a pump. Zooming out a bit, you look at it from this perspective, and there's actually more large orders coming into the charts above now as well. So we're starting to get a bit of interest in the sellers sort of positioning for a bit of a pump. So the fact that we got more in here, I don't know that it'll go up to this level, the 130 level. These guys have been in that order for a long time. But there's a fair bit of volume above, right? And if we look at the liquidation levels, same sort of deal. There is a bit below here. Obviously, as you go up, you tend to get that. But there's a fair bit above too. Like you're still not huge, like 150 million, that sort of thing, versus over here we're at like 500 million. They're not huge levels, but compared, like if you just look at it from a relative perspective, there's a fair bit of incentive to sweep the lows here and then push back up at least into the 117, 118. Then they're probably going to struggle. I don't know whether this is a big enough target to get to. It doesn't have to come up and take all this liquidity before we drop off. So 120 potentially, but it'd only be sort of just to recover some inefficiencies, or if someone put a big sell order at 120, then it's potentially going to suck the price action into that level. At this stage, I think we'll be lucky if we get to 118. Anything above that's going to be a bonus for the bulls. Quick on sentiment too. A little bit of upside, and the dumb money comes back in, whereas the smart money were coming in at the lows and are now starting to drop off again. No huge read on this yet, but man, the dumb money's been high for so long. I think it'd be good if we had one more separation of these two. So smart money dropped off again, dumb money got high again. That would potentially be where you would find the next top. All right. I think that's about it for today. That was a pretty long one. Sorry for being so boring, but I just try and keep a neutral tone. I don't want to get too excited in my voice for any particular outcome or anything, because that would potentially sway people. I just want to say it how I'm thinking about it. But yeah, generally not a bad level here for a base on any market. Um, Gold probably needs to have a little bit of a pullback at the highs for Bitcoin to actually find its next leg up. But in general, not a bad area, maybe a little bit lower, but I would expect a bounce to come probably in the next week or two for Bitcoin and the markets in general. If we don't, markets sell off and something breaks, then obviously look out below. All right, catch us later.